Three companies today, all navigating strategic pivots. A restaurant operator rethinking real estate, a food service equipment dealer going on an M&A spree, and a POS company rebranding itself as a Store OS platform. Let's dig in.
Yeah, and there's a common thread. All three are leaning hard into transformation while margins get squeezed. Let's start with ticker 3329.
So this is a restaurant operator. Record sales at 13.3 billion yen, up 3.9%, but operating profit fell 7%. Classic cost squeeze.
Right. Labor and ingredient costs hit margins. But the big move is their store location strategy. They're abandoning shopping malls for roadside locations with ordinary leases. They already closed 2 Lalaport stores.
So they're trading short-term foot traffic for resilience against rent hikes. Smart or overly cautious?
I think it's defensive but rational. Malls give you traffic, but you're at the landlord's mercy. They also divested all cross-shareholdings in peer restaurants. Matsuya, Utoya, Yoshinoya, aligning with TSE governance pressure, and they rolled out serving robots, QR ordering, real-time cost tracking.
Full DX push. Dividend up to 22 yen too. One odd thing though, they dropped the gender wage gap disclosure that was in last year's report. Convenient timing. All right, Tenpo's Holdings, ticker 2751. This one's wild. Revenue up 13%, but net income fell 8%. What's driving that disconnect?
Aggressive M&A integration costs and upfront investments. They acquired a sushi delivery company. Sunrise Service took a majority stake in Marsh and did a stock swap to bring Meiwase Sakasho in-house for manufacturing their own private brand equipment.
A restaurant equipment dealer vertically integrating into manufacturing. And they're entering the beauty industry too.
Yeah? Launched Salon Graph to apply their consulting model to sole proprietor salons. The whole framing shifted to this Dr. Tenpo's concept. Tempo Busters diagnoses store problems. Group companies provide specialist solutions. They even set up a Mongolia entity for recruiting foreign workers.
Ambitious, but they explicitly flagged beauty as a risk, since they have no existing know-how there. Row dropped from 14 to 11%. The market needs to see integration pay off.
Finally, Smaregi, ticker 4431. This one's the standout performer. Sales up 20%, net income up 35%, Row at 26%.
And they're redefining themselves from a POS provider to a Store OS platform. ARR hit 11 billion yen. They reclassified maintenance fees into recurring monthly usage, which accelerates the subscription narrative. Dividend jumped from 15 to 24 yen.
They're also prepping for a TSE Prime market listing to expand their investor base. Founder-directors stepped down, brought in the Abeja CEO as outside director for AI governance.
AI is now a core pillar. They launched an AI agent co-creation model where AI handles routine coding. They also expanded the CVC into a 10 billion yen Store OS fund for strategic M&A. And they're entering fintech with a factoring service for SMBs and a duty-free refund business ahead of November's regulatory changes.
Aggressive but organic this time. They actually liquidated their Vietnam dev subsidiary and merged their EC acquisition back into the parent. Focus over sprawl.
Common thread across all three. Every company is repositioning for a tighter labor market and inflationary environment, but the execution varies wildly. Smaregi's platform play looks the most coherent.
Watch for Tenpo's integration costs over the next couple quarters and whether 3229's roadside strategy actually holds foot traffic. That's it for today.